Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, March 22nd. Okay, I hope you guys had a great weekend. Figured out at least a few ways to feed the brain, get ready for the trading week. Looking back on Friday, the quad witching seemed to me to be mostly much ado about nothing. Most of the key levels held. There wasn't any insane moves. And I'm always amazed when, they talk about the biggest pension rebalancing in 10 years and like you're looking for something to move and you really don't see it. So I don't know what that was all about. So we'll chalk it up to the market being the market and doing what it wants to do, and we'll fit in around it so we can figure out what we want to do. So anyways, new week. We'll see if there's any added volatility this week after the gamma pinning and all that technical stuff tied to the option expiration have rolled off. Let's see where they want to take it. So at 6:30 here as I'm starting the video, excuse me, quick look at futures. The large caps and the small caps are largely unchanged, but the Qs are up significantly. Well, in comparison, they're up about 0.85%. So is this the reemergence of growth? Are the Qs fighting back to get back on an upward trajectory? That's going to be an important question that we will want to answer here and watch it very closely, because at least in the last few sessions, Qs have been doing more than just hold their own. They've been making some progress, especially Facebook, which is off to the races. So let's look at the indexes first, then we'll dive into FATMAAN. Then I have a few chart setups that I want to show you. One last housekeeping note: I found out that I am #1 on the list today to get a my first COVID vaccine shot. Unfortunately, there's a little bit of driving that I have to do to get there, so I'm gonna blast off and do that after the video here, and then who knows how much of the morning session I'll miss while I am doing that kind of thing. I have no idea if it's going to be chaos or if it's walk in, walk out. We will just have to find out when we find out this morning. So I will let you know how that goes. So SPY 2 hour last week, wrapping up Friday, we had this drop. We reached down to the top of this gap here, the second gap. We filled this one already and reached down for 2 tags of that level. Then we got a nice lift and then a little soggy into the close. Now, being a pattern recognition guy, I'm looking at this. This looks like an impulsive drop, a Fibonacci bounce, and then a rollover. We're going to have to see. That's nothing to trade off of here this morning, but that's what the pattern looks like. Down, reflexive bounce up right into the pivot area at 391, and then a fail. So we'll have to see. I think this morning, if SPY can recapture this 390.50 to 391 area, then it can get some running room to the upside. But if it remains pinned down below this level here, this prior level at 390.50, then we've got the bottom of the prior gap down here at 389, and then this gap here below as potential targets on the downside if things roll over. Notice that our RSI has dropped below 50 and our PPO is still on a downward trajectory. And then remember, what the bulls want to see as far as these indicators is that they simply flatten out here at the 0 line, do a PPO reset, and then put in a bull cross, in the days ahead, and then that would give you confidence that the next up cycle is underway. Let's look at the 30-minute chart. Here you see that drop and the bounce and the rejection here at 391, coming back into this gap. Now, I'm not sure. I'm going to have to check on it, but I think there was a dividend paid on SPY on Friday, so that's why some of these gap numbers look out of whack, because they pulled out the dividend, and I'll have to readjust all that stuff. And that is a reason why oftentimes it's good to track XPX, because it doesn't have that in there, so you don't have these quarterly adjustments that you need to do, like on SPY, to account for the dividend. But most people don't trade XPX, so it's 6 of one, half dozen the other. If you've got the time or the inclination, you can, obviously track both. But you see the levels here, and this is often why I like to keep, even though the gap has been filled, keep that in there for a while, because the levels still tend to be important. So if you got a move back below Friday's low here into this gap, you certainly want to be short at that point for this potential gap fill. And then we've got a much larger gap down here that still has yet to be repaired. Qs came down and held this, had a look below, but held this 313 area. I think that's your pivot for today. As long as 313 holds, I think this can drive higher. We've got overhead resistance at 316 and 319 and 324. So there's work to do on the upside for the Qs, but at least near term, with the futures indicated up almost 1%, it seems like it would be challenging this 316 area off the open, and possibly up to this 319 area. And remember, like we always talk about, the gap open higher will leave a gap below. Don't get sucked into buying in the first 3 minutes or whenever. Make sure that they don't do a flash gap fill lower to as a technical move to fill that gap. If they do that, then you've got an excellent risk reward opportunity to buy against the Friday close, and then after that gap is filled, and then hopefully they would reverse it and then take it higher. So here's the 30-minute chart of that. Here's that resistance level at 316 that we talked about, and note the open gap above, which is sizable. You've got basically a $4 gap here, and that would certainly be something as a tactical trader, an active trader, that you would want to be long for a potential gap fill, even if you didn't participate down at this level. Once it enters this gap here, I would imagine that that would fill. That would be a nice move. Moving on to IWM, which has been a little soggy lately. Again, you've got this look here, the impulsive drop, and then the bounce, and then the little rollover into the close. But notice that on a technical basis, came right down to fill the next gap. You had 2 chances to buy down at 223, or on the recapture of 223.50 at the bottom of the gap. Recapturing that level from below was your technical buy, and then you got a really nice push up to 228. So I mean, if you bought at 223 or 223 and a half, you got a $5 move there up to 228. I mean, that is an awesome trade. 30-minute chart. Here you can see it a lot clearer. You had the reach down to this 223 level. Actually, the low was, 222.95. So right down here, technical fill of the gap. Two chances to buy, and then you got a $5 push up towards 228 or even a little higher. So here this morning, I'd want to see 227 hold if I was a bull, and I think you can be long against that. But if it rolls over and loses 227, I think your next level is 225 and potentially 223 if it comes back to check this prior low again. So, right now we seem to be seeing some value cyclical weakness. I mean, we've seen that in our holdings. Honeywell, 3M, both have taken hits, unfortunately, not long after we got them. So we're going to have to watch those closely. Watch the airlines and stuff like that. Watch the banks. I noticed TLT rising a little bit. And remember, that remains a crowded short. So any kind of little pop in TLT could send a lot of shorts to cover, which would, of course, drive yields lower, which would make banks soft, and probably a lot of those cyclicals soft as well. And remember, on Friday, I sent out that XLF, the Spider ETF for financials, triggered a daily sell signal on a break of trend. So, watch it if you're loaded with banks and other names like that. It might be a time for things to get a little soft. Before I dive into the FATMAAN charts, if you're new here, why not hit the subscribe button and the alarm bell? Get all my content every time I send stuff out. Also, look over in the show notes. You'll see links to the blog site and a place to register for all my content. That way, anything I send out, you'll get a nice, neat email in your email box. You won't miss a thing. Intraday updates, trade ideas, all that kind of stuff I send out periodically throughout the day. And it would be great to have you along. And also you'll get a link for our trading room, and you can join our community. Got a lot of nice girls and guys in there working hard to improve their trading, and it's a really nice community. You'll find a lot of nice camaraderie there. If you choose to join us, that would be great. So, also, if you're a longtime listener, I'd really appreciate it if you hit the thumbs up and give me some ideas on content you'd like to see. I'd be more than happy to review a sector, a stock, anything that you're looking for. It would really please me to be able to do that and respond to what you're looking for. So don't be shy. Hit the like button. That helps me on YouTube. Pass the link along to someone in your trading circle that may benefit from it, so we can create a wider audience. And certainly let me know of any content you'd like to see, and I'd be happy to do that for you. So Facebook is off to the races. I've gone out to the daily chart. You can see that we've broken out from this big trading range that we've been wrestling with for months and months and months. From, let's call it 250 to 280, $30 trading range, breakout from 280, projects to 310 on a measured move basis. I've dropped in the lateral resistance level. We've got one here at 293, and then we've got one up here at 303. So those are your upside targets. If you got a pullback, into 280, that would be a great place to try along if you're not involved. Otherwise, I think you gotta key off of this 293, and if you got some flagging action here right below resistance and then got that breakout from 293, I think you're going to go to 300 plus, at least on a on a technical basis. Facebook has really been the outperformer in the FATMAAN names, which is totally different than Apple, which has been really soggy. You see that here in the charts. And these levels that we've been working with have been doing exceptionally well. Right here, 120.50. You can call it 121 if you want. Above that, I think you can be long, but you see we've got downtrend resistance just above that level. If it falls below 120.50, this gap certainly would be in play, at least to come down and test it at 118.80. And then if it filled it, down in here to 116. So, I mean, the Apple chart looks totally different than Facebook. For whatever reason, a lot softer. I think really, for me, 123 is an important level to get above downtrend resistance, to get up here into this gap, get long against 123, look for a gap fill up to 125, and then maybe another shot at 127. That if it can break 127, then it really should have some room to run. And I think that would be a tell also on tech in general. Apple is such a bellwether, and it's hard to see the cues just running away and Apple just languishing. So even if you're not trading it, keep an eye on Apple for sentiment and general read on QQQ. Kathy Wood is out this morning on Tesla with a $3,000 target. That has prices being lifted in the pre-market. That's why I've got the pivot point here at 670. Above 670, back in this trading range with a technical target up by 705, 710. If it ends up rolling over here at 670, then I think you can be short if they start fading it and look for a move back down towards these prior lows at 630. Now, as far as her target, she knows a lot more about Tesla than me. She's been out front of this thing for years. I think she was first calling for 4,000 before, and she got laughed out of the building until they weren't laughing, they were buying. And remember, that was pre-split, so I don't know how high it got pre-split, but I think it was up there in the high 2800s, or if not even higher. So all things considered, she's been right. So maybe she's going to be right again. But for us, it's just watching the price. You can't get to 6,000 until you get to, until you take out 700. So I don't put too much stock in that kind of stuff. It's fun to speculate. It's fun, if she's going to be right. Tesla is an important stock, and we've shown that it can go on runs before. So we can have that in the back of our mind. But as far as from a trading perspective, can't get to 700 until it takes out 670, and it can't get to 800 until it takes out 730 and these other levels. So go level to level. It's the only way to trade in my book. And once you get those technical confirmations that it's in a new uptrend, then you can camp out for some longer duration trades. Microsoft was soft on Friday. It's down here in this gap. I noticed here early in pre-market trading, it's up a little bit, but 235 is the real pivot. You can see that it spent a lot of time below 235, spent relatively less time above. So here this morning, if it holds 230 and can recapture 232, I think it has a chance for 235. Notice that there's a $3 gap here that needs to be filled, and there's a gap up here between 238 and 241 that only got halfway filled. That needs to get filled. So, I mean, on a technical basis, there is work to the upside on gaps to be filled, and this lower gap needs to be filled as well. So one scenario might be, flash down here to 229, scare everybody, and then revert, fill the gap, then reverse it, come back up here and fill these other gaps. That's just one scenario. It could go the opposite as well. Come up here, fill these gaps, then come back down and fill these. Who knows? But these are the levels, and with all these gaps, both above and below, they're great levels to trade against. Amazon has been kind of in the weeds. I did not check specifically if the free 50 club delivered on Friday. I just did notice it was really choppy trading. You can key off of 30.50 today. Above 30.50, look for 3100. Below 30.50, look for 3000. Those levels have been working very well for us in, going all the way back. So stick with it. Google was soft on Friday, basically a flat day. Came down here to the bottom of the gap, came back up to the top. Remember, that's a technical move in and of itself. Bottom of the gap that holds, your technical target is then the top of the prior range. And so, down to the bottom, it held back up to the top. That's a $30 trade. If you're active and caught it at the low, that was a nice trade for you. So today, I think key off of 2040. If it can break above, maybe get back into this prior range here at 2050, then your target is 2100 again. If it breaks below, remember we've got this big earnings gap from way back when that still needs to be filled, and so there could be some potential further downside there. Netflix, just kind of down here in this range. Above 510, I think it can get to 517 and potentially 525. If it drops back below 505 and potentially 492, 493, if it falls back into this gap that is yet to be filled. Let's go ahead and look at a few charts. This LEU is in the non-ferrous metal group and materials. It's I believe it's a lithium enhancer. Got a nice consolidation flag here. Notice it's wide from 21, let's call it 28.5. So that's a $7 or $8 potential measured move. If you get this breakout here above, say 28.50, you could see 36 on a measured move basis. So nice technical pattern here. We've got a bull cross working on PPO and a breakout working on RSI. So from a technical posture, this thing is set up for a breakout. I would set yourself an alarm, where you see fit, whether it's 28.50 or 29. Just sit there and wait. Prices above all the moving averages. You see they're bullishly stacked. 200, 50, 20, 8. So prices above everything and pushing above overhead resistance. I like this setup. I wouldn't hesitate to take a long there if you got a breakout. XBI, small cap biotechs. I sent this out on Friday if you missed it. It's just an observation that I had that price seems to be carving out a big head and shoulders with this sloping neckline with a 20% peak to neckline distance, and on a breakdown that becomes your measured move all the way back here to 105. And I think Also to point out here that price is below the 50, the 20, and the 8-day. So from that standpoint, along with the RSI and PPO momentum profiles, pretty weak. Not saying that this is going to play out at all. It's just a scenario. I think it's worth an alarm. I don't think all of this happens unless, you could get a breakdown here, come down and tag the 200 in reverse. That's certainly possible. But I would alarm this two ways, as a matter of fact. I would alarm, 132.50 down here at the neckline, and I would alarm the 50 here at, let's call it 148. If price can gather itself and take out all these moving averages and move higher, you could have yourself a really nice long here, say above 148, 150, and look for a move back to the highs if it gathers itself. Once it takes out, all those moving averages, that would certainly be a bullish move. If you're an aggressive trader with price here just below the 50, and you're willing to give it $5 worth of a stop, a fairly lenient stop, you could get short against the 50 and just, simply play for a first target back to the neckline back here. And that would be a nice trade in and of itself. And then you'd be in a position to either reverse if the neckline holds, or roll down if the neckline breaks, and then you'd be in a really nice position. But that's all a matter of personal preference, whether you want to try and wait for a long, whether you want to take a short now against the 50, or you want to wait and see if price revisits the neckline, which would give you a very objective level to either go long or short. Last one on the list today is this PWFL, ID Systems in the telecom group, pressing up against this 9 level. You can see that was a problem before. It's a problem now. There is some bearish divergence you can see here on RSI. RSI was high at this peak. At this peak here at the same level, it's somewhat lower. That's bearish divergence. We've also got bearish divergence here on the PPO. PPO at the second peak is lower. So that's a setup for a double top. Now we'll have to see if that plays out. But I would be setting alarm above at 925. And if you're interested for a potential downside break on this setup, you could actually take it now, and you've only got, it's sitting at 875 or 863. If you gave that 40 cents, a stop above 40 or 50 cents at resistance, then you can play to the short side and put some faith in those bearish divergences. They don't always play out, but a lot of times they do. And this is the classic double top setup with bearish divergence. So that's an interesting one to me. Let's wrap it up there. It's coming up on 7 o'clock. I will get this video rendered and sent out to you. Then I will head out to my COVID shot and come back at you mid-morning, see where markets are. I hope you guys have a good start to your trading week. Remember, level to level, respect your stops. Let's watch the Qs if they start getting their footing back. Of course, watch interest rates and TLT. If they start rising, that's going to put pressure on value, cyclicals, banks, financials, that kind of stuff. So those are the things I'm watching today. Hope you have a good day. This has been Chris Buss with Traders Profit Compass. Talk to you next time.